Welcome back. Now, copper prices touched a new 9.5-year high as investors continue to bet that tight supplies of the metal will continue as the world gradually recovers from the COVID-19 pandemic. Now, prices have shot up about 16% this February, the biggest monthly rise since November 2016, taking gains since the start of 2020 to around 50%. Analysts expect demand from the power and construction industries to overwhelm supply, potentially pushing prices into record territory above $10,190 per ton. Now, they also say that prices may see a pause in the short term, but the outlook still remains bullish and any corrections will be short-lived. Well, let's take that copper rally apart further. We're joined by Peter Major. He's a director of mining at Emergence. Great to have you on the show with us, Mr. Major. Now, of course, experts are saying that copper may be heading for a period of scarcity pricing. We're seeing investment firms like Goldman raising their 12-month price target to about $10,000 per ton. Given that prices are currently above $9,000 per ton, and of course looking at the fundamentals in the market, could we see copper exceeding those expectations?
Thanks, Uche. Yes, we can definitely see it exceeding that. And I know we haven't seen that price very often in 40, 50 years. But if you look at the circumstances we're living in now, this whole COVID virus, it's affected supply more than it's affected demand. And all of us made the assumption when it first broke out in February, March, that they would be equally affected. In fact, we thought demand would be affected even more than supply. And that's why the mining shares fell so hard. And that's why the commodity prices fell so hard, if you remember back in March, April. But nothing recovered quicker than these commodity prices. And I'm as surprised as everyone. And they have not stopped recovering since March last year. And the reason being, China is 50% of offtake now. China is like America was back in 1950s, 1960s. It takes in 50% of these commodities. And China managed to contain the virus very early on and very well. And it's not just that China has 1.4 billion people. China's producing for probably 50% of the rest of the world. And so their engine barely slowed down during the virus, and they're consuming copper like never before. They were already taking in 50%. But look at all the mines. The mines are in countries that have been hit hard by the virus. Copper comes mainly from South America and from Africa. And boy, who's been hit harder on this virus than South America and Africa? And so demand is stronger and has held up better than supply. And so, yes, these prices can easily go. When I see the cryptocurrency like Bitcoin exceed 50, I can easily see copper going to 10,000.
Well, let's take a closer look at the market. Now, last year, fund buying was pegged as the driver of copper's recovery. Today, they seem to be taking a long position, and certainly it seems like investors are worrying about the potential of a correction in the short term. What are your thoughts on that?
My thoughts are you have very good sources and you're doing your job very well, because that's the latest information I've got, that it's not just as simple as normal supply and demand, that the funds, the hedge funds, the traders, the derivatives, they are playing a very big role in this. So I think you're 100% right, Uchi. They are magnifying something that was happening anyways. And if you look at back to the 60s, copper went as high as 16, 17,000 a ton. So if you now have traders and hedge funds and non-traditional users playing this game, yeah, copper could easily go from 10 to 12 to 14. But again, like you say, it's not sustainable. I don't think it's sustainable, but we can't just crank up supply. Zambia just can't invent electricity out of nowhere. The DRC can't just invent electricity and railroads out of nowhere. But China, they literally have demand out of nowhere. So the supply response is going to be very slow. And mines are afraid of just spending a lot of capex now to bring in more production when they're worried, hey, these are high prices. By the time our capex is spent, the mine comes into being, the prices fall. Miners have been burnt on all these bull runs before, and I've never seen them so constrained and so prudent as now. They are very reluctant to expend money on more capacity. So that's going to support these prices for longer than normal.
Well, we do have to leave it there, Mr. Major, but thank you so much for those great insights. That, of course, was Peter Major. He's a director of mining at Emergence.